Hey guys, my name is Evan and welcome to Economics 101, your number one source for everything econ. What if one of the biggest threats to economic growth isn't inflation, interest rates, or government debt? What if it's simply a shortage of workers? Around the world, populations are aging, birth rates are falling, and labor shortages are becoming increasingly common. In today's video, we're going to break down a couple of key specific things as it relates to the aging population. We're going to break down, number one, why aging populations are accelerating, how labor shortages affect economic growth, and what this means for inflation, markets, and the future economy. Before we break down the video, I do have a quick favor to ask that really helps grow the channel. If you enjoy Economics Made Simple, consider liking the video, subscribing, and turning your notifications on. Let's go ahead and get into the video. We're going to start with the demographic shift. So for decades, many economies benefited from growing workforces. More workers meant more consumption and faster economic growth. But that trend is changing. Birth rates have declined across much of the developed world. At the same time, people are living longer. As a result, populations are aging rapidly. The share of retirees is growing while the share of working age individuals is shrinking. This creates significant economic challenges. So economic growth is driven by two major factors: workers and productivity. If the labor force grows slowly or shrinks, economic output becomes harder to expand. Businesses may struggle to fill positions. Projects get delayed, expansion plans slow down. So labor shortages have become particularly visible in industries like healthcare, manufacturing, transportation, construction, and hospitality. When employers cannot find workers, economic growth can weaken. A tighter labor market often leads to higher wages. So that sounds positive, and for many workers that is positive, but it can also create inflationary pressure. Businesses facing higher labor costs may increase prices. Consumers then face more expensive goods and services. This creates somewhat of a balancing act. Strong wage growth helps households, but excessive wage-driven inflation can challenge central banks, and that's where the Federal Reserve comes into the picture. The Federal Reserve closely monitors labor market conditions. So if labor shortages continue to be persistent, inflation, policymakers may keep interest rates higher for longer. Higher rates can influence your mortgage rates, your business investments, consumers borrowing, stock market valuations. So investors increasingly pay attention not just to inflation reports, but also labor force participation and employee trends. Demographics are becoming a major market story. So we're going to shift and talk a little bit about technology, immigration, and the solutions. So economies solve labor shortages. Can economies solve the labor shortages? Possibly. Many experts point to three major solutions. First, productivity improvements through technology and automation. Second, increasing labor force participation among unprecedented groups. And third, immigration policies that expand workforce availability. Artificial intelligence, robotics, automation may help businesses produce more with fewer workers, but implementation takes time and demographic trends evolve slowly. We're going to have a quick break. If you want more easy to understand breakdowns of major economic trends, make sure you subscribe because we cover these topics every week. We're going to jump back into the video. The economy's future won't be shaped only by interest rates or inflation reports. It will also be shaped by demographics. An aging population means fewer workers, changing consumer behavior, and new challenges for policymakers. The question isn't whether demographics matter, it's how governments, businesses, and workers adapt. If you enjoyed today's videos, please hit the like button, subscribe, and share it with someone who is interested in economics or finance. And here's today's question. Leave it in the comments below. Leave your answer in the comments below. Do you think technology can solve labor shortages, or will economies need major policy changes? Let me know. This is Economics 101, helping you understand the numbers behind the headlines. See you next time on the next video. Thank you.